Should we buy or sell the US dollar slash the Taiwan dollar pair? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So here we have the pair, 4.75% here from the 52-week low, basically at the highs. This is a very interesting pair because Taiwan, it's recently been in the news because Chinese authorities, they do view the economic and military links between America and Japan and other neighboring countries as sort of like the Asian version of NATO. So given what is happening now, with NATO and Russia, there's definitively a lot of concerns about what could happen in terms of Taiwan. So looking here just purely first at the big picture, the chart, we do see that there are time cycles, definitively. The problem with the time cycles is that they have differed very substantially in duration. You had like a big fat time cycle here, then you had a couple smaller ones. We are currently seeing a major rise, and that is happening from a double bottom pattern. So let me just draw that in. With smaller circles like there, and here, a very clean double bottom, and boom, we go up. We have seen a nice rally. We also have broken out above these prior highs. So it certainly seems like people are bullish now on the US dollar against the Taiwan dollar, which means that people are bearish on the Taiwan dollar very sharply so. And this has happened in the context of NATO Ukraine, NATO Russia. So do some people know something? Is this just speculation? Just hedging? Who knows? The thing is that the currency market is only moved by the big fish. So this is not Reddit, okay? These are very big players who have good information. We are still, of course, very far away from the highs here, but we are coming from a double bottom. We do have a breakout. This looks like strength. Looking at the daily data points, we do see that the move has definitively been rather significant. We do have some time cycles here on the dailies as well, but here again, the duration of the time cycles have differed over time. If we look at these other indicators, so from a purely technical perspective, ignoring geopolitics and all of that, the technician in mid would definitively look at RSI and the 20 and the 50-week PPO and say that, well, when we look here at the previous times we had this reading, it was here. Going short here was very good timing. Here also you have a high RSI and PPO, 20 and 50-week PPO. You did see some bearish action here, but it was more noisy. But even here, it did work out as a short, but not as beautiful as this one. This was a beautiful short. So that is the technicals. On the daily data points, we do see that reading we have here on the MACD. So if we look here at this line that it draws, it is extremely rare for us to see this kind of MACD. We have to go all the way back here to 2015 to see a time where the dollar had a more sustained uptrend. And also looking here at the 50-day moving average, the 100-day in blue, and the 200-day moving average, we currently have readings that have been very beneficial to bears in the past. So, in terms of the line in the sand, we are definitively overbought. That's very clear. In a big way, so RSI and PPO. So from a purely technical perspective, looking at the previous times, recent times where we had these readings, we definitively did see that it favored the bears more than it favored the bulls. So let me give this one a -4. As far as the long-term radar, we did see that we are emerging from a double bottom like that. In terms of seasonality, there's a difference here between the right and the left end of this screen. So let's start here with the right. So this is the pure pair. We do see that from a seasonality perspective. Looking in green here over the last 5 years, we usually see that the US dollar weakens against the Taiwan dollar towards the 22nd of June. In blue here over the last 7 years, we see weakness towards May, but then some strength. Red over the last 10 years, then overall we do see strength. So there is mixed messages here when it comes to seasonality. Short term definitively favors a bearish trade. Longer term is more bullish. If you look here at the left, so stock chart does not have seasonality data for the pair, but we can get data for the US dollar, pure dollar index. Over the last 5 years, we do see that it goes from strong February to ultimate weakness in July. The last 10 years, April is the weakest month. And the last 20 years, we do see that April is the weakest month for the dollar. So in terms of the seasonality here, I think I will give it, given that April is the weakest month for the dollar, I think I actually will give a -4 here as well. I think that this is, the seasonality definitively favors more bearish thesis. In terms of fundamentals, it's very tricky when it comes to the Forex market. However, the big question here is definitively what happens between China and Taiwan. That will have the biggest effect here on this pair. If we did see that the Russian ruble just was absolutely crushed when we had the start of the invasion, and also after that. So if China were to invade Taiwan, we definitively would see an extraordinarily spike here in the US dollar. So it's a bit tricky. My guesstimate here would be a 2. I do think that there's some risk here that China might do something in terms of Taiwan. Historically speaking, looking over thousands of years, China is a rather pacifistic country that favors stability above everything else. So the only way I can see China deciding to actually invade Taiwan, that would be if they think that that will increase stability, such that, Yeah, okay, anyway, let's look at the correlations. So we do have minus 90% here with the S&P 500. That's very strongly negative. That is a long term. Minus 77% with the gold. And then minus 94% here with the EWT, which is the Taiwan stock market ETF. Then 70% positive here with the dollar index. So looking purely here at the strength of the correlations, many people would probably assume that the strongest would be with the dollar index, but very interestingly, the weakest correlation we do have here is with the dollar index. Daily data points is minus 52% with S&P 500, 64% positive with gold, minus 73% with EVT, and 55% here with the dollar index. So looking short and long term, the strongest correlation we do have is with the EWT. So given that it is a very strongly negative correlation, it means that they sort of move opposite each other. When we look here at EWT, so we had this major rally here that was peaking-ish around, mid 2021. Ever since that, we have been consolidating, but given this recent low here, and you see here on the wicks that we did go below these wicks back here, there is some initial signs here of something that is a bit rounding topping-ish. So we have gone from consolidation to now having a bit more precarious situation here for the bulls. Here also we do get the death cross, the 50-day crossing below the 200-day moving average. So a decline here, due to the correlations, a decline in the EWT would most likely be beneficial for the US dollar, meaning it strengthens against the Taiwanese dollar. Here we are looking at the relationship between the US dollar, Taiwanese dollar pair, and looking at those against the EWT. So ever since the high here of March 2009, the currency pair has weakened very substantially against the stock market ETF. That is to be expected. Stock markets, they usually outperform just staying purely in cash. But there have been times where it's been better to stay in cash, like during here as an example. So let me just draw that in. So here we form a nice rounding-ish bottom. But this is also one of those examples of why it's best to get in early in the rounding bottom. What a lot of people do is that they wait until they get like a fully formed one, but many times it does break down a bit, maybe forming a temporary cup and handle, or alternatively just falling to pieces. When we look at the most recent developments, we do see something here that looks a bit rounding bottom-ish. So the initial signs are here. We have gone from bears dominating to bulls dominating a bit here, which means that the currency pair has started to outperform the stock market ETF. That's interesting. Let's just look at the EVT here against the S&P 500, like that. Well, I guess we first should look here quickly at the seasonality. So looking at the seasonality for the pair, we usually see that, there's a tendency to weaken here towards late April and then some strength. Okay, now let's look at the EWT against the S&P 500. The S&P, being the major, benchmark out there. So looking at weekly data points, very erratic relationship, as you can see, very jagged, up and down in very sharp moves. But as of late, the pattern has been a bit more stable. We have something that looks a bit like a major monster inverse head and shoulders pattern. So that is a key pattern in development at the moment. What is a bit precarious for the pattern is that we do see that there is a horizontal level that the bears keep testing. So if you look at this, so you see like here. So the bears are hitting, and the more times it is hit, the probability of a break goes up. So what does the seasonality support? So over the last 10 years here in red, we usually see that Taiwan tends to outperform the S&P 500. In blue, over the last 7 years, we also see that. And also in green here, over the last 5 years, overall, Taiwan tends to outperform American stock market, heading towards August, actually. I think the most, key things we looked at here is definitively the relationship between the currency pair and the Taiwanese stock market. We also looked at the stock market itself, which has some rounding topish pattern that, could be beneficial here for the dollar. So I do think that the bulls, they do get this one. So I give the bulls a 3. So we end up with a score here of minus 0.8. So overall, the data is more favorable of bearish trades than bullish. But the key obvious caveat in this pair is that what happens geopolitically will have the biggest effect, and that is reflected here through the fundamentals. If we do get an invasion, then this 2 will jump up to a 9 all of a sudden, and the technicals and seasonality will become completely irrelevant. But anyway, this is definitively a currency pair you want to have on your radar, because it's where, we could get a very, very huge move.